Ladies and gentlemen, good evening and welcome to Ajmera Realty and Infra India Limited Q2 FY24 earnings conference call. We have with us today Mr. Dhaval Ajmera, the Director of the company, Mr. Nitin Bhavesi, the Chief Financial Officer, and Ms. Sonia Agarwal, the Senior Manager for Investor Relations. Please note, all participant lines will be in the listen-only mode, and there will be an opportunity to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Ms. Sonia Agarwal. Thank you, and over to you, ma'am.
Thank you. Good evening, everyone, and a warm welcome to you all. On behalf of the company, I would like to thank you all for participating in Ajmera Realty and Infra India Limited earnings call for the second quarter of FY24. The call will commence with opening remarks by our director, Mr. Dhaval Ajmera, and will be followed by the business performance discussion by our CFO, Mr. Nitin Bhavesi. We have already shared the operational update.
Sorry to interrupt, ma'am. Can you come a bit near to the mic?
We have already shared the operational update of the quarter in the second week of October 2023. The investor presentation and the press release based on the financial results adopted by the board have been uploaded on the stock exchange website and can be downloaded from our company website. Please do note that some of the statements in today's discussion may be forward-looking in nature, reflecting the company's outlook and may involve certain risks and uncertainties that the company may face. I would now like to hand over the call to our director, Mr. Dhaval Ajmera. Thank you, and over to you, sir.
Thank you, Sonia. Very good evening to everyone. I hope everyone's doing well. I just want to say that, we as India as an economy, and we all are looking in a very positive and a great position. It's a very optimistic surrounding where the Indian economy currently looks like. This positive outlook is underpinned by several growth or catalysts, which I can say, which is really helping, expand our country to, a very different level and also propelling consumer spending. This growth trajectory is projected to elevate India to the position of the second largest economy in the Asia-Pacific region and surpassing the Japan in the process. Real estate, of course, in all these means is also playing a very pivotal role to ensure that it continues its growth and its performance towards the expansion of the Indian economy. And, with all these, the recent festive seasons and the economic output, I think the overall positive outflow of people buying real estate has been very good. And we can definitely see that from the sales performance and also from the recent, the registration data, which always shows that, the registrations in Mumbai, specifically where we operate, has been, growing at registering 10,000 plus units every month on month. And overall, if you look at it, where all these cities, including Mumbai, Pune, Bangalore, are looking at a good growth in the real estate sector. Obviously, this sector has been driven by 3-4 factors, which we perceive to be. Number one is the most biggest thing is that the recent decision of RBI, where they have maintained the repo rate to be standard and same as for the current levels. And this is given, coming at the time of the upcoming festive season. It also plays a very big reason for people to buy. Number two, the middle class income, disposable income in the middle class segment has been, growing year on year. And plus the development and infrastructure of cities in Mumbai and, different other cities has also been playing a key role for people to take opined decisions and investment decisions towards real estate. So overall, we are definitely very positive about the outcome and looking forward for a great year in the coming 6 months. As far as our projects are concerned, I'm pleased to share that all the progress and all the projects which we are currently being under development has been progressing well. Ajmera Eden, I'll start with, which is the Ghatkopar project, has been doing strong. It is continuing to have a strong launch momentum. Remarkably, we sold 32% of the inventory in the last 4 months from its launch. Construction also has been progressing steadily. We've reached the ground level. Second project, our Ajmera Manhattan, obviously the flagship project of ours, has been doing steadily well. It has, the Tower B of the 2 towers, construction has come up to the mezzanine level, and Tower A is also following the suit. Notably, we've also sold 54% of its inventory. So as far as sales and construction both are going, it is doing really nice. We are very pleased and proud to announce that we have gotten OC, occupation certificate and completion of Ajmera Greenfinity and Ajmera Sikova way below and way earlier than the RERA timelines which we have mentioned. These both projects have been done commendably well. We have sold almost more than 90% plus in both of these projects, and we have completed below 36 months of, for both of these projects. So as far as sales and as far as construction is concerned, for Ajmera Greenfinity and Sikova, completed way below time, sold also well. So overall, it has been a successful run. Ajmera Privay, our premium project in Juhu, has also seen a great progress towards construction, where we have done about 8 floors of construction already done out of 12. And impressively, we have, in the micro market of Juhu, we've achieved construction of every slab on an average of 14 days. And with this also, we have seen markets and momentum moving, where we've seen about 31% of our inventory already being sold in this particular project. Usually this project sells post construction or nearing completion, but selling at this stage also has been great. If we come to Bangalore now, our mid-luxury project, Ajmera Nucleus, C Wing, has already been finished, almost finished. We are 99% sold in terms of its inventory, and our commercial project has also started catching the momentum of leasing, where we have initiated some leases and we are hoping to have more in the coming quarters. Our affordable segment of project, which is Ajmera Lugano and Ajmera Florenza, has been progressing rapidly, with 68% of its inventory already being sold, and also we are seeing a great momentum in terms of its strong demand for quality homes in these areas, and we are hoping to have the balance inventory being sold quicker as well. In the first half of FY24, our business development has made great efforts to further strengthen our footprints in Mumbai. We've acquired a valuable piece of land in Vikhroli, as we had earlier announced, with a GDV of 550 crores. And over and above this, we have done we've acquired about few redevelopment projects in Mumbai. The one being at Warsaw, which is in the prime area of Andheri, which is having a GDV of 360 crores. Second redevelopment project is Yoginagar, which is a redevelopment of 4 societies in Borivali, with a GDV of about 330 crores. We've acquired an SRA project in Bhandup, where the entire slum has been vacated, and we have started the development and construction of the same, where the development potential is about 1.7 lakh square feet with a GDV of 320 crores. This is talking about Mumbai. When we look at Bangalore, we also have acquired one more project or one more land in Electronic City Phase 2, under a joint development agreement with a value of a GDV of about 150 odd crores. So with all of these above, we are progressing great towards our growth trajectory. With all these projects which I just said, and plus the other projects which we already have in our kitty, we are looking at 2,750 crores of sales revenue coming in, with a potential of 1.3 million square feet to sell. These projects will be started or being started now or will start soon. Over the next 3-4 years, we shall see these projects being completed one by one. These projects firmly demonstrate our growth progress and dedication towards creating value for our stakeholders. The recent announcement firmly aligned with our goal of achieving 5x as we bolster our portfolio and further our presence in these promising micro markets. We remain resolute in our commitment in achieving 1,000 crores of sales in FY24, backed by strong sales momentum that has already carried us halfway towards realizing our 5x growth vision in half one. This growth trajectory is anchored in a well-balanced mix of redevelopment, joint ventures, strategic acquisitions, and unlocking of potential of our land bank. So in all fields of development at Ajmera, we are progressing well, and we are looking forward for a great year in the coming balance half. I would now like to hand over this conference call to our CFO, Mr. Nitin Bhaviti, who will take you through the performance highlights of the year. Thank you.
Thank you, Mr. Ajmera. Very good evening, ladies and gentlemen. I appreciate your presence, and I would like to share some of the key performance highlights before opening the floor for questions and answers and more interactions from both the sides. In the second quarter FY24, we observed a remarkable 50+ growth numbers YOY basis in terms of sales area and as well on the value basis also. So in terms of sales value, we have clocked the sales of about 252 crore during the quarter 2 FY24. Further, we maintained the momentum of our collections as well at 111 crore at quarter 2 FY24. The sales growth was primarily driven by the sustained launch momentum of Ajmera Eden and the significant contribution from Manhattan and as well on other ongoing projects as well. Coming to financial numbers, performance remained stable compared to same period last year due to very high base effect of the last year. Let me clarify upfront that last year, similar period, quarter 2 FY23, we had Manhattan as a project which got had the revenue recognition eligibility for the first time. So on a quarter-on-quarter on a YOY basis, the financial numbers are to that extent on a limited purpose is not comparable. So with that clarification, let me dwell down onto the quarter-on-quarter numbers. On QOQ basis, revenue jumped by 26% to 148 crore. EBITDA and PBT stood at 40 crore and 29 crore respectively, with EBITDA margin at 27%. We believe that we will be able to maintain these margin levels going forward with well-balanced mix of projects company is executing currently. PAT stood at 23 crore with a 7% Q1 to FY24 trailing quarter, I mean to say, and with a PAT margin at 15%. As you all know, one of our ongoing focus areas is to have financial stability. Keeping this in mind, we were able to maintain or rather sustain our debt equity ratio to below 1x since FY24 when the financial year when we started. And this particular endeavor is going to be, on a continuous basis, give and take because of the aggressive business development activities. Weighted average cost on the debt side has been 12.1%, marginally higher than because of the RBI CRR requirements and a couple of loans which has the annual reset of the floating rate basis. We are delighted to report strong revenue visibility of approximately 4,755 crores encompassing our existing project as well as upcoming launches. In the next 6 to 12 months, projects at advanced stage and those for which we have received OC is expected to contribute 190 crore to our revenue, and our mid-stage project portfolio is expected to contribute about 1,800 crores to our project portfolio on the revenue side within the period of about 30 months from here on. The estimated net cash flows from our existing portfolio is expected to be about estimated 960 crores, reinforcing our strong financial position and ensuring successful completion and execution of our growth strategy. This robust revenue visibility provides good confidence in our ability to deliver sustained growth and value to all our stakeholders. With this brief on the financial and the important business highlights, I would like to open the floor for the question and answers and further interactions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Before we take this question, I would like to remind participants that you can press star and 1 to come in the question queue. The first question is from the line of Jeevan Patwa from Saharsar Capital. Please go ahead.
Dhaval, just few questions. So one is this quarter, I think we have handed over some 1,000 keys. So that revenue should come Q3, I guess. We'll build that revenue in Q3, right?
So basically, that particular endeavor was to club few of the projects and to hand over the a remarkable number of 1,000 possessions in a given time frame of about 24 hours. So we pulled our few of the projects like Nucleus, Greenfinity, Sikova, and wherein the occupation certificate has been received, and we handed over this commendable, and we bolstered this particular achievement as well.
So that revenue will be booked in Q3?
As we follow the revenue on a progressive basis, so Sikova, Greenfinity projects has already been participating, and as well Nucleus participating into revenue cycle as we move forward on the execution.
So to answer your question, most of it would have been done, and we will continue to do so while we have the OC coming in, whatever is balance left.
Because if I actually look at the numbers for the half year, then in the top line, in the bottom line, both has been degrowth actually. So just wondering, is second half going to be much better than the first half?
So I think to compare year on year is a little challenging in real estate segment, because some projects or some when we have a great sale, and when it is being, and while we follow the revenue recognition, project completion progressive thing for taxation purpose, it is different for different projects. So while we had a great run over Manhattan sales last year, and which had a higher volume and higher sales, so that actually gave a great numbers to our books. And while this year it is more on sustained mode, and the velocity or the volume of projects which we have announced are not as bigger as compared to Manhattan, hence we probably see here and there. But overall, we towards the growth of the project, and if you look at the momentum where last year we were at around total sales of 800, where we are very positive about and looking at 1,000 odd crores of sales this year. So obviously we are progressing and not moving back.
And just to support your question on the number basis, if you read the slide number 14 in the investor presentation, we have already sold position of about 780 crore, and where from the revenue is still unrecognized. So that those revenues is going to be recognized on a progressive basis on the execution of the project. Just to specify a particular project, as Dhaval mentioned about the Manhattan, 782 crore worth of the sales has clocked into Manhattan, out of which 275 crore worth of the revenue recognized. So 507 crore of the revenue yet to be recognized based on the pre-sales numbers. So this kind of a numbers will keep on coming into income statement on the execution and progress of the projects.
Okay. And is there any big launch in the second half? So are you thinking of launching Manhattan 2 or any other big launch?
Well, we are planning, we are looking at all things subject to some approvals coming in place. We have a few projects already been tied up. So hopefully, if all permissions come in place, we will definitely do some launches.
Perfect. And anything on the repatriation of the money from outside? So we were about to get some 250 crores from outside. So is there any progress in that?
Not as of this quarter or this year, this half of the year, but we are expecting some part of it to come by the balance and majority becoming later part of the next year because of the Bahrain project, which is anyway expected in FY24-25.
Okay. Thanks a lot, Dhaval. Thanks.
Thank you.
Thank you so much. At this time, if you would like to ask a question, please press star and then 1 on your touchtone phone. The next question is from the line of Runit Kapoor from Systematics. Please go ahead.
Yeah. Hello, sir. Thanks for the opportunity. So I want to know, going forward, what would be a mix between affordable and luxury housing, and mid-income,
So we are, it depends on the market to market, but primarily, we are focusing a lot with all our current projects which we have or we've acquired. Some are mid-luxury and some are luxury, but not many are. Some are also affordable. So it's a mixed bag, but there is no percentage that we will only do 20% of affordable and 50% of mid-luxury or something. But it depends on the project. It depends on the opportunity. And we are not averse to any one particular thing, but if I really look at Mumbai as a micro market, it makes more sense for us to do mid-segment and a little luxury as compared to affordable. But if I look at Bangalore as a market, then again over there is also affordable or mid-segment to that range, which may be 50-75 lakh bracket, which is a mid-luxury in Bangalore micro market. So overall, wherever there is an opportunity, we would look into it and take it forward.
And are you looking to expand into any new micro markets?
No, we are currently with whatever projects or what we are conceiving is more into Mumbai, MMR, Bangalore, and Pune.
Okay. And this last question. So a lot of developers have started this development management model, where more of a service model where they're taking a fee. So are you all looking to enter into that?
Well, we are exploring a few, but nothing has been tied up for now. But it depends on, viability, visibility, and in a way how it works. But as of now, we've not tied up it.
Okay. Thank you.
Thank you. The next question is from the line of Dev Ajmera from Investor. Please go ahead.
Hello. Hi, Dhaval bhai. Why is there a delay in the demerger process?
So typically, as I've been clarifying, we are at the last leg, but petition unfortunately is not coming on the board for the hearing. Otherwise, we are very hopeful it's a plain vanilla travel of the asset from the holding company to 100% subsidiary. So that's the reason. But we are hopeful on the first opportunity. We are hopeful of getting this through kind of.
Okay. Thank you.
Thank you. Participants who wish to ask questions may please press star 1 at this time. The next question is from the line of Harish Shah from iShare Capital. Please go ahead.
First of all, thanks for the opportunity. I would just like to know from the management that we are aiming for close to 1,000 crore sales by FY24. So, could you just help us know that what would be the specific launches that would be help us to attain those numbers, and how would be the growth being seen in the coming year, and any ballpark number for FY25?
So as we have given the breakup of the inventory available, which is about 1,500 crores of inventory available to sale kind of a thing. So that is going to be definitely the ongoing projects will help us clocking these sales. Plus, we are very hopeful that kind of experience which we have in about 4 months Eden has given us a sales of about 30% plus. So that's the kind of case study or the performance is giving us a good confidence. So if you refer to the slide 15, we have given the 7 project launch timelines. So couple of projects which are like into FY24, like the Greenfinity, Electronic City 2, and as well the Central Mumbai 2. So these are the projects which we expect, and we are on track to have the launch in time, and keeping the confidence index high onto the launch velocity of sales. So coupled with the existing inventory of the project portfolio plus these launches, we should be, which we are already halfway, we should be having the 1,000 plus crores as we have guided.
Okay. And if you can share something about FY25, your goals for that, and any ballpark, any guesstimate would be also working.
So typically, if you read the last 2 years numbers, like 430 crores, or from FY22 we traveled to 840 crore plus. Now we are giving the 1,000 crore in FY24, which is our estimation. So that's the kind of base effect on which we are progressing, kind of a thing. And the launch which are there into beyond FY24, which also will be participating as per our list. Overall, 2,750 crore is the estimation from this 7 projects, plus the ongoing inventory of the existing portfolio. So we are very hopeful of clocking 1,000, and then after on a higher base of that 1,000 to have the numbers in FY25 as well.
Okay. And with regards to our debt, so we, I think this in H1 FY24, there was some marginal increase in that. So if you can clarify the same, and what would be your debt reduction plan for the coming couple of years?
Sure. So if you have noticed the last paragraph on my brief, we have about 900 plus crores of unlocking cash flow from the existing portfolio, which is having the life cycle of about 30 months, as we have given the guidance of the revenue recognition. So that particular operating cash flow is going to help us. And if you notice this 7 project acquisition which are of low capex, except one, we have other 6 projects which are of the nature of society redevelopment or SRA projects and such kind of a thing which doesn't require the investment upfront. So we are keeping our debt management from that particular standpoint. And yes, it is a marginal, from March basis to September, it is just a 10 crore which we have increased.
Okay. Thank you for the detailed answers. I'll be joining back in the queue.
Thank you.
Thank you so much. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Thank you for the opportunity. So I just wanted to ask, so our focus is, out of the total business, mainly in MMR area of Mumbai. So just wanted to know, with the increase in pollution and the government bringing in strong regulations, how has it affected our projects? Because recently we heard that a prominent builder in Mulund, they had to close down their business for a few days as they were issued notice. So, and could you explain us what regulations, how it is going to pan out, because even elections are heading, so probably they were very strict on it.
So the government and BMC has already issued us guidelines as to how we have to tackle or look at pollution levels, and what do we really need to take as precautions. As a company, we were majorly doing that, but however, there were a few guidelines which have come in. We are already implementing that, and we are trying to maintain whatever best is possible in terms of water fogging, in terms of cleaning the tires of the trucks before it moves out, and also covering the entire building with the net to some certain extent, and increasing the the peripheral surrounding walls to a different height. So all that precautions have already been given to us. We are working towards it, and we are ensuring that we follow those guidelines and do not try to stop work.
Right. Is it with respect to the stop work notice that is being sent apparently? Is there they want that 35 feet height in or metal sheets to be erected, etc. Right? Or else the notice is coming in. Can you tell me if it is a significant expense that is coming in for all our projects, or it is very small? For all the equipments and whatever is needed for the same.
Technically speaking, there will be expense coming out. It's not that it is going to be easy task. However, there is a lot of monitoring and uploading to be done, which is going to be a little more tedious, where we have started, pulling our team to ensure to do that. There are some AQI monitors, or pollution sensor monitors, and stuff like that, and the water mist systems to be provided. That all we are doing now. We cannot, really move away from this, and it's a responsibility which has been given to us as developers by the government, and in order to ensure that if we can probably provide some bit to reduce the pollution, we should do it, and that's what we are doing.
Okay. Another other question from my side is on part of the revenue booking. Revenue that we need to book in our P&L. What is our estimate for FY24 and 25? Roughly, if you could give us a ballpark number.
So, if you notice, on the base of FY23, where revenue top line was 440 crore, we are already at 261 level in the first half. So, definitely on a equation basis, we are ahead of the curve, and we are getting newer projects like Bangalore and few ongoing projects, Manhattan and Privy, which is the high margin project. So these are the projects continue to participate into revenue recognition cycle. So those ones definitely help us to give a good significant jump over the base of about FY23.
Okay. But sir, if you could, give a number to it, maybe 15-20% more than what it is in 23, would it be a fair assumption?
So the progressive accounting, definitely this is the function of the execution of the project. So as I've briefed on the earlier question, we have revenue unrecognized out of the sale position, which is 780 crore. The faster we execute and bring this progressive revenue to income statement would be the earlier basis kind of a thing.
Right, sir. Thank you for the opportunity and all the best.
Thank you so much. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead.
Hi, thank you for the opportunity. So in the earlier calls, like in the past 4 or 5 con calls, we have been guiding about the 30% EBITDA margin. So are we still sticking around this 30% range?
So we are in that range only. And let me clarify that the EBITDA, or for that matter top line, right from the revenue up to PAT, is always a function of the composition of the projects which are coming into the revenue cycle at given point in time at a reporting date. So that always be the, that's the reason quarter on quarter is clarified by Dhaval. It is not that comparable kind of a thing, but we are very hopeful of maintaining our margins to this level.
All right. Also, the previous participant asked about debt. I couldn't get that point. Can you please give any ballpark number with respect to debt servicing in the coming years?
So basically, we have the debt level which is almost 1x of the debt equity right from FY24, which we have entered. And despite having the business development activity, however, 6 projects out of 7 is low capex or the redevelopment or the SRA, wherein the investment is not upfront, but it is over a period of time in terms of the corpus and rent and transit accommodation and things of that sort kind of a thing. So those kind of a thing doesn't require investment upfront kind of a thing. So that is going to conserve us cash flow. Plus on the completion or the fast track execution and as well on the launch of the new projects which will generate cash flow for us. So those kind of a thing will help us on the debt management as well.
All right, sir. All right. So, okay, fine. That was my question. Thank you.
Thank you so much. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Utkarsh Somaiya from Utkarsh. Please go ahead.
Thank you for the opportunity. I just wanted to clarify one thing. Out of your current project portfolio, the revenue potential is 4750 crores, am I right? Including all the inventory in different stages of completion?
So if you refer to slide 14, it is 1216 crore on the inventory to sell and 780 crore of the revenue, which is on the basis of the already pre-sold position. So both put together, it is a 2000 plus crores of the revenue, which is yet to come from the ongoing project portfolio.
So I am looking at slide number 21, which says that you've received OC for projects for 2,000 crores and plus potential launches are 2750. So that sums up to 4750 crores. So
yeah. So as I clarified that 190 crore of the sales revenue from the OC received or advanced completion of the project and 1800 crore of the revenue from the mid-stage project. That's how the breakup of overall 2000 crore, which I explained from the slide 14. And plus we have the sales potential of the launches, which is having 2750 crore over 7 projects of 1.3 million. So both put together will have the revenue visibility of 4,750 crore.
And if I'm right, you expect to realize all of this from now until FY28, right?
So we are already in FY24 and 1800 crore worth of the revenue, which is the largest chunk from the ongoing project portfolio, for which we have given the guidance of 2.5 years, which is 30 months. And 2,750 crore, as Dhavalbhai explained, is the launches having the life cycle of about 3 to maximum 3.5 years, 4 years kind of a thing. So that's the kind of timelines on which this entire revenue gets recognized upon sales and execution.
So is it fair to say that if you complete all the sales until FY28, you will probably realize around 1,200 crores of average sales per year? May not be in one particular year, but I just mean to say average sales. Is that a fair understanding?
Yeah, on a mathematical basis, yes. On the 4 year, 4,750 crores. So 1,200 crores is what you are arriving the number, right?
Yes. And since accounting for real estate is different, as far as investors are concerned, our pre-sales and collections is what we must focus on instead of looking at the P&L sales. Is that right?
Very appreciative. Yes, and that's the reason the sales numbers, which is the guidance of 1,000 crore and having the sales clocked of 830 on the base of 430 last year kind of a thing. So that gives a good confidence about the, yes, revenue will follow into the income statement having sold aggressively.
So it would be incorrect to say that your sales have degrown because that is just the P&L and not the pre-sales. Is that right?
So typically revenue recognition will be having the lag of sales kind of a thing. So once you have a good performance on the sales side, income statement will definitely follow accordingly.
But it can always be that the income statement follows after 1 year, right? Or maybe more. But if I talk about first half...
Not typically, because execution of the project, faster you execute and incur your cost, that will accelerate the progress or the measurement of the revenue or the progress of the project, and accordingly the revenue gets recognized.
Okay. Thank you so much and Best of luck.
Thank you.
Thank you so much. The next question is from the line of Mihir Desai from Desai Investments. Please go ahead.
Thank you for the opportunity. So first of all, I wanted to ask you macro questions. So currently, what is your take on redevelopment landscape, especially in MMR region? And would you prefer to buy a new land and develop, or redevelopment would be a better option in MMR region? Just wanted your take.
So primarily my take is, at least our take is that redevelopment is a good opportunity in the city of Mumbai or the suburb of Mumbai, because where the land costs are really high and honestly there are not too much of land available, so obviously redevelopment is the option. Number two, we are not averse to not buying land, but we particularly feel that if we do a JV, JDA, or we do a redevelopment where the capital investment is less, we can probably do 4-5 projects versus doing one project and buying the entire land. But obviously it depends on opportunity to opportunity. While, like, just giving an example of one we bought a few months back in Vikhroli is an outright buy. We've done a few redevelopments. We've done a slum redevelopment. So it's all it's on the opportunity and the IRR returns, which we feel is great and helps us get a better top line, is what we look at.
Sure. Sir, are there any projects in pipeline which you are looking, or any targets in the segment?
So a team is constantly evaluating in different portfolios, be it slum, be it society, or be it outright sale. As in how the opportunity unfolds, we probably bring it on the table and make an announcement. But for now, we've done, if you really look at it, this year we've majorly done most of the acquisitions. I don't think we'll have any more coming in very recent, but otherwise we already have done the acquisitions, and now we are also concentrating on getting approvals and getting these projects started.
Sure. So a follow-up question on new launches, sir. So as we see, there are lots of new launches in current quarter and half yearly. But I just wanted to check with you that how much confident are you, on executing the projects and delivering it on the expected timelines?
So if you really look at our history, we've always been great in execution. We've always had a good record for delivery. Very recently, we've also just got, as I said in my brief, that we've got occupation certificate of 2 of our projects. This is Ajmera, Greenfinity and Picoa, way before the RERA timeline committed, at least on an average 9 months to 1 year before. So we are very confident with our team, and that is when we are making announcements, we make sure that we will be able to execute and we will be able to deliver. So that's how we are moving ahead with these projects.
Sure. Great. Good luck, sir. If I have further questions, I will get back to you.
Thank you.
Thank you so much. To ask a question, please press star and 1 now. The next question is from the line of Harish Shah from iShares. Please go ahead.
So thanks for the opportunity once again. So this is again a kind of continuation from the previous participant and a kind of macro on the sector. So what is the expectation? How would the real estate sector perform in the coming couple of years? Seeing that we have been seeing traction all over the nation in the sector, and what are the potential challenges and how we would be able to mitigate that?
So if you really look at the real estate market has been doing really nice, and it has been progressing well over the last 2-3 years post-COVID. Importance of home has always been there, and with COVID it just multiplied, and it made multifold interest in different sectors of people, be it young aspirants, be it mid-age income, or be it old. Everyone is looking at larger apartments, Everyone is looking at good apartments with amenities. People's expectation for spending have also been increased. People are, spending good amount of money in their day-to-day lives. So overall, the economy is doing well. If you really look at, the world economy, which is suffering from some of the other wars here and there, but still India is progressing well, and because of its current or inherent growth or inherent requirement, our take is the real estate market will continue to grow. The market is looking buoyant, at least next few years definitely looks good. There may not be great price hikes, which is okay and understandable, but if the momentum continues, I think it is a very, very good sign. The government is also helping it well. The only problem which we foresee, and we really hope the government does not take such kind of steps, is maintaining the interest rates at this level or probably reducing it from what it is. I think if that continues, this momentum will continue to grow. And overall, I think I really don't see too much of an oversupply coming in. But if the infrastructure projects which are moving around in major cities like Mumbai and Bangalore or other cities or wherever, I think they are progressing well. If these continue, I think overall the progress of the nation and those cities will grow, and with that, real estate will definitely take the momentum.
Okay. So just one continuation. You just mentioned that if the interest rates support like remain stagnant or decline a bit, this would add momentum to the current growth that we are seeing. That is what you mentioned.
So, yes, definitely the momentum will continue. If there is a decline in interest rate, obviously liquidity will be there in the market, which will boost up the sales, is what our feeling is. But definitely with the current state, even if it's being stable, I think there has been a steady progress.
Okay, thank you, sir, for the opportunity. Once again, I wish you all the best.
Thank you so much. As there is no further question, I now hand the conference over to Mr. Nitin Bhavisi for closing comments.
Thank you, everybody. I would like to express my sincere appreciation for your interest and taking out time for joining us and hearing us our credentials. And we look forward to any further questions or interaction which you have to our IR team or to our EY, our investor relation consultant. And we look forward to interact with you all. Until then, I wish very good greetings for the upcoming festivity season, and stay safe, stay happy. Thank you.
Thank you so much. On behalf of Ajmera Realty and Infra India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.